As you can see from the chart, the number of infected people in the world is growing steadily, and the first wave of the epidemic didn't go anywhere. That is why markets have been growing non-stop since 2009, and the gap between the real economy and stock prices is becoming wider. But in reality, the future is quite uncertain, and the only right decision now is hedging against investment risk. Glad to welcome you to the Coin Post channel. A terrible thing happened. The stock market dropped 3% in a day, the S&P 500 index again jumped up to 3,000 points, and now a new collapse is about to begin. But we're not sure about that. Looking at this, Warren Buffett must be shedding bitter tears. He got completely disappointed in his young followers, which may never have followed his rules in the first place. In this video, I would like to discuss the real reasons why the stock markets have been falling in recent days. And I was hoping you could support this video with thumbs up, so that more people can see it, and perhaps, together, we will have the power to bring financial markets back in good condition. Don't forget to subscribe if you're here for the first time. Let's dive in. Those who monitor financial news are already aware that investors decided to sell more shares after the International Monetary Fund lowered its global growth forecast. At the end of 2020, the global economy is to fall by 4.9%. Given how many people have lost their jobs, how many small and medium-sized businesses have shut down or are on the verge of bankruptcy, and taking into account that production volumes have decreased, then I've got a lot of questions about the IMF forecast. Probably the 5% drop includes both financial support for the central banks and the recovery of demand and production in the second half of the year. By 2021, they expect growth by almost 2 times more than it was in 2019, before the corona crisis, so there are plenty of optimists among their analysts. Another terrible piece of news, excuse my tautology, is about the second wave of the COVID-19 pandemic. In some US states, the situation is getting critical again, which gives rise to rumors about the need to shut down the economy again, at least locally. And here I've got a question. Why does everyone talk about the second wave when the first one didn't seem to finish? As you can see from the chart, the number of infected people in the world is growing steadily, and the first wave of the epidemic didn't go anywhere. It's just that in a number of countries the situation has become less critical, and therefore they began to lift the quarantine measures. Or the second option, the states could not stand the quarantine and it was decided to say that they're fine fighting the disease without it. So what scared investors? The IMF forecast or the new quarantine? It seems that this news had nothing to do with it, as most of the market players found out about that after the stock market dropped. What they worried about was the possibility of another collapse like in March, because the last time after the S&P 500 index fell below 3,000 points, we got a sharp 30% collapse. This is what modern investors fear the most, that the bubble could burst and they will stay poor. And this is precisely why Warren Buffett is now shedding crocodile tears. Technological progress is not always right. An example would be how many victims could have been saved if people had not invented gunpowder and dynamite. If we get back to the stock market, then its history began with trading floors and quotes, delivered by courier pigeons or delivery guys on horseback. Then came the telegraph, then the telephone, and today you have all the power of the stock market on your smartphone. Everyday investments are becoming more widespread, new people come with new money, which increases the price. That is why markets have been growing non-stop since 2009, and the gap between the real economy and stock prices is becoming wider. Investments got massive and lost their original sense, succumbed to price speculations. And what is happening on the market now is the best confirmation of that. Nobody follows the life lessons of Warren Buffett and doesn't buy a business. If this were so, then the market would continue to drop after the March collapse. After all, the economy stopped, companies suffered huge losses, the oil market collapsed, and if not for the government support, we would have gotten a series of high-profile bankruptcies. In such a situation, an old-school investor will get rid of risky assets and choose those companies which business will not suffer during the current crisis. It's actually what Warren Buffett is doing by selling shares in airlines and banks, while sitting on suitcases with billions of dollars because he sees no prospects in any business. But what about the new generation of investors? They literally toss a coin and buy because the price is going up. The prolonged period of growth since 2009, fueled by new money due to the mass popularization of investments and the simplification of access to them via the internet, has taught us to work according to a pretty simple scheme. You see an asset growing, you buy it because tomorrow it could be even more expensive. Instead of analyzing the business, setting goals, making portfolios and so on, the majority simply throws money while pumping a giant bubble. More interestingly, most of them realize this, but they are convinced that they will be able to profit and exit the market before the collapse. Therefore, new generation investors freak out when they see they are approaching a psychologically important price because the doomsday could come at any time. But if this doesn't happen, if the markets continue to maintain the price, they get back in the game because everyone else does it, and it's hard to stand aside. And now a few words about what to do. The truth is, no one can accurately predict whether there will be a new stock market collapse. There are many forecasts like this. There are also enough preconditions, and most people are now trying to go with the flow as they were told about the terrible collapse, and in the hope it's gonna happen, they think they can rest on its laurels. But in reality, the future is quite uncertain, and the only right decision now is hedging against investment risk by the rules of reasonable investments. Evaluate the market, analyze businesses that could bring you income in 3, 5 or more years, regardless of whether a new crisis will break out in 2020, 2021, or in some miraculous way won't happen at all. And most importantly, do not succumb to the wave of mass hysteria and spiral into speculation, because in a growing market everyone thinks they are cool, but sooner or later, as the trend changes, they all end up in the red. After all, maximum historical prices look nice only on the charts, but in reality, very few transactions are made there. Markets are falling too fast to make a profit, or at least take part of your money. Subscribe to our channel please, turn on the notifications and support our projects with your thumbs up. And that's all for today. Thank you for watching, it's the Coin Post channel. Subscribe and get enlightened.